Hello guys, so you're welcome to another video, and in this video we're going to be talking about correlation in forex market. Okay, correlation in the simplest or in a simple form simply means or simply refers to two, or let's just say correlation refers to an agreement, okay, or an alignment in the operation of two different bodies, okay, or two different objects. All right, so let's say we have object A and object B, and these two objects they are behaving in like manner, okay. They are said to be correlating, okay. So if you see, if currency A is rising, currency B will be rising. If currency A, or maybe we should not go into that yet, because there are different types of correlation, okay. With time, as we progress in this video, I'm going to be telling you or explaining different types of correlation. Okay, so correlation in forex market refers to the statistical relationship between the price movement of two currency pairs. All right, so positive correlation means that the pair moves in the same direction. Okay, so we have positive and we have negative correlation. Okay, why negative correlation means they move in opposite sides. All right, so in positive correlation, we'll have that um, a particular pair, okay, is moving in a particular direction. So if A is correlating positively with B, that means if currency A is rising, currency B is also rising. Okay, so if currency A is falling, currency B is also falling. Why? Because they correlate positively together. All right, so I'm going to be giving a few examples on currency pairs that correlate. So when you get to the forex market, you should know what you should be expecting. Okay, if you see GBP USD, or okay, let's just go into it. Okay, so number one example we have here is Euro USD and GBP USD pair. Okay, they often have a strong positive correlation. Okay, so when one pair rises, the other pair also rises as well, and vice versa. Okay, this is because the pair are heavily influenced by the US dollars. All right, so the GBP USD and the Euro USD. All right, currently, if you take a critical look, you would discover that the chart, although these are two different charts, okay, one we have the Euro USD and the other we have the GBP USD. All right, so but you would discover that as GBP is rising, okay, where you have this the arrows indicating a rise and fall, okay, in the price of in the currency pair, okay. The rise means GBP or euro is rising above the USD. Okay, so and the fall means that GBP USD or Euro USD is falling against the euro or GBP is falling against the USD. That means USD is gaining value above the euro. All right, so just taking it's quite obvious here that these two pairs are correlating positively. Okay, so we'll get to look at another example. All right, so in this example, we have a negative correlation. Now you would see here obviously that USD CHF and USD JPY, these two pairs tend to correlate negatively. So if USD JPY is buying, USD CHF is selling. If USD CHF is selling, USD JPY is buying. All right, so right here we have that the USD CHF and USD JPY pair tends to have a negative correlation. Okay, when one pair rises, the other pair falls, and vice versa. And this is because both pair have the US dollars as the quote currency and can be influenced by several factors. Okay, several factors like US interest rates, non-farm payroll, and the likes. Okay, so exchange rates and the likes. All right, so right here we have a typical negative correlation. So when you get to the market or when you get to your chart and you see USD CHF buying, your mind should tell you that automatically USD JPY is selling. Okay, and when you check and you see that USD JPY is buying, you should know that USD, even without checking the chart, you should know that USD CHF is selling. Okay, is in a downtrend, is in a short position, or is in a bearish position. Okay, so that That is another example. So we'll move to another example: Euro USD and USD chef. Okay, Euro USD and USD chef correlates negatively. Okay, they have negative correlation. So when Euro USD rises, USD chef tends to fall. Okay, and vice versa. All right. So, and it is still because the USD serves as a quote currency, and every news you would discover that virtually every currency, or virtually every major currency, is being affected by the US dollars. Okay, so last time I checked, actually the US dollars has the highest thriving economy in the world. Okay, so that is definitely one of the reasons why the US dollar tends to affect, okay, or the news or any factor that affects the US dollar tends to affect the other major currencies, okay, of other countries. All right, so right here we have that the Euro USD correlates negatively with the with USD chef. All right, so in our next example we have that AUD USD, which is the Australian dollar, okay, the Australian dollar and the USD card, all right, they tend to correlate positively, okay. So when the AUD USD is rising, USD card is also rising, okay. USD card, this is AUD USD is Australian dollar, and the card is the Canadian dollar. Okay, so and when the Australian dollar against the United States dollar is rising, then the United States dollar against the Canadian dollar would also be rising. Okay, so these are just typical example or examples of positive and negative correlation. All right, so that will be the end of today's video, or of this video, and I hope you were able to draw value from this, because you are going to be using this knowledge to exercise your trading. All right, so thank you guys. Cheers and God bless.